So you don't qualify for a conventional loan. What are your options? Well, today we are here to tell you that FHA loan is one of those options for you. So Tracy, what's an FHA loan?
So an FHA loan is a mortgage that's backed and insured by the Federal Housing Administration. Because the federal government backs the loan, lenders can have somewhat more flexible guidelines, lower down payment options, possibly lower interest rates.
So there's a few things that end up popping up, in conventional. You have to have 5% down. FHA, you got 3.5%. What else?
So let's say you have lower credit scores, or your debt to income ratio is too high to qualify for conventional. An FHA loan may be the route because FHA is a little more forgiving when it comes to credit scores. And when I say that, the PMI or the mortgage insurance is fixed with FHA. It's not based on credit scores, but the interest rate is. So typically a government loan, FHA, VA, or RD, the rates or the pricing are a little bit better. So whenever I get an application from a client, this is what I do. I go over everything and then I re-interview my clients and say, okay, what are your goals? Are your goals to be in this house for 3 years and then move out? Are your goals to live in this house and then keep it and then rent it out? Are your goals to keep this house forever? Mm-hmm. So based on that, I customize a loan that fits their needs best because not every borrower is the same.
So what I'm hearing, first off, lower down payment, credit score is a little bit more forgiving whenever you're going through, so we can actually go through a little bit more, and then easier to be able to go and approve from a debt to income standpoint. And that's, the amount of debt you have based on the amount of income you have, that percentage is a little bit higher. So they're a little bit more forgiving whenever it goes through from that perspective. Yes.
Right. Yeah. So a good example, I had a file recently for a friend where they qualified for conventional and they qualified for FHA. Now, the rate difference between conventional and FHA was about a point for a 30-year fix. And their credit scores were good, but they weren't 800. So the rate on the FHA loan was so much lower. In addition to that, it was a sizable purchase price, a sizable loan amount. They're going to put 10% down. So on FHA, when you put less than 10% down, the monthly mortgage insurance is there for the life of the loan, unless you pay it off, refinance it, sell it, whatever. However, if you put at least 10% down at purchase, at year 11, the mortgage insurance drops off. And they wanted to do a permanent buy down. So the permanent buy down was more affordable for the FHA loan. So with them knowing this was going to be pretty darn close to their forever home, and knowing that MI would drop off at year 11, we looked at conventional, we looked at FHA, we compared and contrasted over the whole loan term, the whole 30 years. And after doing all of that math, it made more sense for them to go FHA, because once that mortgage insurance dropped off, their mortgage payment was so low. And so it made sense. That's not going to be the case for everybody. That's a one-off. That's that situation where I do that interview to see what their goals are so I could better.
And the trend lately has been interest rates have been a little bit lower on these government-backed loans.
Not trend. It's always, that's always been the case. So government loans have always had lower interest rates. And the offset is you're going to have mortgage insurance on that, depending on the loan type. But with conventional, the mortgage insurance is credit score driven, just like the interest rate is. So if you have a 700 credit score instead of an 800, for example, the mortgage insurance and the interest rate are going to be more impacted on a conventional loan than they will on an FHA loan.
Gotcha.
Yeah.
So what are some of we talked about the advantages of FHA loans. What are some of the disadvantages?
You do have that upfront mortgage insurance that gets financed over the 30 years. So that's something that's there no matter the down payment, no matter what. However, let's say you buy a house with FHA and rates drop and you want to do another FHA loan, depending on the unused portion of that MI, that upfront
Premium.
mortgage insurance, some of it may be refundable. In other words, you would get a credit on your refinance, potentially, maybe. And then the monthly mortgage insurance, again, if you don't put 10% down at purchase, it's there for the life of the loan.
Yeah.
So, and you can put more down with FHA.
So that ends up being, if you put FHA, traditionally speaking, is there for a little bit lower down payment, kind of more of an entry level purchase, or you run on some tougher times from a credit score perspective. It's one of those tools that
it's a common misconception that you have to be a first time home buyer to use an FHA loan, and you don't. And you can use an FHA loan again and again and again.
Mm-hmm.
Yeah. So if you have some blemishes on credit, or if your debt to income ratio is high, credit scores are low, FHA may be the product for you. Yeah. Now it's just for primary residences.
Yeah.
So you can't buy investment property or a vacation home with FHA. Now you can buy a duplex and live in one side of it.
You took the words out of my mouth. So that could be your primary residence.
It could
for a
be.
year.
And then you could buy a duplex. You could live in one side and rent out the other side and still buy it with FHA. Now FHA is likely going to require a higher down payment depending on the area. But you may be able to go that route to help offset the mortgage payment.
Absolutely. Have somebody else pay your note. We're real big fans of that with all the investment property. So here's the deal. FHA loans can be a fantastic stepping stone into home ownership for the first time, second time, third time.
Yeah.
So where can they find you?
Tracy.Lacer at HancockWhitney.com.
As always, we will see you next week.